Hello and welcome back to goldstocktrades.com. Today we have with us Josh Bleak. Josh is CEO of Passport Potash. Passport can be traded as PPI on the venture, and it also can be traded as PPRTF on the OTC. Thanks, Josh, for being here with us today.
Thank you for having me.
Josh, in the past year, we've seen the S&P 500 make a very strong rally, but some of the large potash companies have been flat. Can you tell us a little bit about the supply, demand, and why investors should be looking into potash right now?
Absolutely. Right now is a very interesting time with not only the majors, but the junior potash companies all being at or around 52-week lows. And a lot of that's due to the uncertainty within the market. When you discuss fertilizers, they're often dependent upon credit and credit relationships for the purchase of fertilizers. However, more particular to potash is so tightly controlled by the producers that what you see in times of uncertainty in the markets as we've had, you will see the consumers of potash withdraw themselves a bit and see how they can gain a little bit of control back from the majors and that pricing. And so we've seen recently they'll sit on the sidelines and wait till they think that there's a good low point in the pricing reached and then come in a pretty significant way. So it's not consistent as you would like to see in a typical producer-consumer relationship. But right now you've got the consumers taking the opportunity to sit on the sidelines and find good entry points. And then at that time, they'll secure a 1 million or 2 million ton contract. And so we've seen some good pricing, and we've seen some good consumers come in and get some good deals recently. But this is definitely a time when looking at the juniors that our role as junior companies, junior potash developers, is to de-risk these projects. And clearly the number one risk with non-producing companies has become that financial risk. And I think that's why you're seeing so many of these junior potash stocks at relative lows right now across the board.
Josh, let's focus on Passport Potash and the recent PEA, the preliminary economic assessment that was just published. Can you highlight some of the key numbers that makes Passport stand out?
Definitely. In addition to those numbers, some of the things that are really communicated in this PEA are things like our infrastructure and the lack of risk that you have with a mining jurisdiction like Arizona. Arizona is one of the top mining jurisdictions in the U.S., top copper producer in the U.S. So we've got a fantastic jurisdiction to mine from. We've got ideal infrastructure in place, and what that does is, as we have now this PEA that looks at the economics of the projects, we can now compare ourselves to those other greenfield projects, those other non-producing projects around the world. And some of those numbers that we use to compare are things like OPEX. Right now, our OPEX, all in, we're looking at a number of about $114 per ton. And I emphasize all in because some of the juniors are reporting numbers that don't have. They'll have a primary OPEX cost, and then they'll have secondary costs that are related to additional capital investment to sustain their brine or in situ operations. So you have to really be careful when using those numbers to compare project to project. Another big number is our CapEx. We're looking at just under a $2 billion CapEx to bring in a conventional underground mine of 2.5 million tons per year. And if you compare that to a Canadian junior looking to do solution mining of similar production, we're in at $2 billion. Most of those projects are $3 billion plus. And the other key component of it is that we are, again, conventional underground mining that we're evaluating, whereas those projects are considering solution mining. If you were to build a conventional underground mine of this size in Canada at those depths, the Canadian deposits are about 3 times the depth of what our project is in Arizona. You would be about 3 times the cost. You would be looking at anywhere from a $4 to $6 billion capex. So those are 2 good numbers to use when comparing projects. Also, we're looking at one of the lower capex per ton numbers in the industry. And the interesting thing about a capex per ton number is you can use that not only to compare the projects junior to junior, but recently a lot of the majors have done brownfield expansions, and you can find capex per ton numbers on those majors. And kind of a magical number within that capex per ton is $1,000 capex per ton, and our number is far below that. We're going to be right in that $700 to $800 range capex per ton, and that puts us on the low side, whether it's a greenfield project or a brownfield expansion.
Josh, let's talk about some of the goals now that you have this PEA in hand going into the rest of 2013.
Sure. Another important number that came out of that PEA was a 26-year mine life. 2.5 million tons per annum. We're looking at an initial 26-year mine life. So one of our first goals is to increase that mine life. We'd like to get that mine life in excess of 30 years. So as a part of the PEA and the resource that was released just prior to the PEA, there were recommendations of how we could bring that mine life in excess of 30 years, just a small amount of infill drilling. Other drilling that will be conducted this year is related to the engineering and the construction phase of the project. We're doing what's called geotechnical testing, where we're, to this point, our drilling has focused on the potash horizon. So we use an inexpensive form of drilling to get down to the potash horizon, and then we switch over to core drilling and really focus in on that potash horizon. Now we're looking at all of the formations or strata above, and the reason that we do that is again, this is an underground mine, so we will be building a shaft down through those other strata, and it's important to really have a good understanding of that data. In addition to the drilling work that we'll be doing this year, we look to complete a pre-feasibility study by year's end. Pre-feasibility will take some of what we've seen demonstrated in the PEA, and it will take it to the next level and further de-risk the project. We'll get into more in-depth engineering and more in-depth mine planning, and it takes that accuracy level from about a plus or minus 35% down to a plus or minus 25% as we then prepare to complete a definitive feasibility.
Josh, it's a tough financial market for the resource sector. A lot of people are concerned about how a company such as Passport is going to be able to fund this project. Can you talk about the steps going forward to secure funding for advancing this project?
Sure. One of the unique points that I touched on with potash just earlier is how tightly controlled it is. You have probably the 5 largest producers representing 3 regions within the world that really control about 75% or more of the industry. And so what that's created is a willingness by the consumers to participate in greenfield projects like Passport's project. Recently, we've seen significant investment going into North American potash juniors. And the reason that I touch on that North American part is that ultimately, I touched on this, that we will de-risk this project or look to de-risk this project to a point where it warrants being constructed. These North American projects benefit from having stable jurisdictions, politically, mining friendly. They're also not lacking infrastructure. So we've seen the investment go into Canadian projects. We've seen strategic investment going into U.S. projects in New Mexico, U.S. projects in Utah, and that's important for Passport. Now that we've got an economic assessment that looks at what the numbers are, to this point we've only had resource, so we've been able to talk about the potential of the deposit geologically speaking, but have never got a brief glance into engineering or a brief glance into the economics, and that's what this PEA offers us. So now as we prepare to try to further the relationships with potential strategics, with those that are interested in not necessarily the financial aspect, but more the offtake, more the consumption of your product, this gives us a major milestone that we can take to those groups. And just recently, at the end of the year, 2012, we saw a significant investment from an Indian company going into a potash junior in Canada. And so we're going to continue building those relationships, continue looking for that non-traditional investment or strategic investment. And not only are those investments less dilutive if they carry any dilution at all, but they are with companies that look in having a long-term vested interest in the project. They're not making that investment again with the financial aspect in mind. They're looking at a return on investment from an equity or stock position. They're looking at securing offtake, and they're looking at helping these companies bring these projects into production. And so that's really a unique thing that we have as Potash Juniors. If you can get these projects to a stage where you can de-risk these projects, you've got opportunity where you're going to have these consumers want to participate. Ultimately, if you de-risk the project all the way through permitting and bankable feasibility, we've also seen purchases by major mining companies. We saw K+S purchase a Canadian project. We've seen BHP purchase some of those Canadian projects, and so those are greenfield projects developed by juniors and now being moved forward by majors. So we've got some good opportunities as Potash Juniors to really get some good participation.
Well, Josh, thanks for being here with us today and for giving us some insight into the preliminary economic assessment and why Passport is such an interesting opportunity.
Thanks a lot, Jeff.